Are you looking for a mortgage loan in 2023 with lower rates, more flexible guidelines, and a low down payment? The FHA might be what you're searching for, but it's not for everybody. In this video, I'm going to go over the pros and the cons of an FHA mortgage loan. All right, Matt, the mortgage guy, residential mortgage broker, powered by You Mortgage, licensed across the U.S. If you're looking to connect with me and my team, you know how to do it. GreatMortgageBroker.com. Fill out the quick form. We're happy to help. Whether it's an FHA loan or any other loan type, we're loan experts and we're here to help. GreatMortgageBroker.com. In this video, I want to talk about the FHA loan. It's making a comeback. More and more buyers are using this loan in 2023, partly because of market conditions, and it's easier to get offers accepted on FHA and other government loans, and partly because it's really the best program for them, either as a first-time home buyer or a buyer returning to the market with not so perfect credit. Whatever the case, you should take a look at FHA loans to see if it's the best bet for you. So in this video, I'm going to go over some of the pros and the cons to figure out if it may be the best loan for you. The best way to decide what the best loan for you is to talk to a professional, give them all the information they need to help you assess it, and then maybe even show it side by side. Here's a conventional 3% down. Here's FHA 3.5% down. I think that FHA is best, or I think that conventional is best based on X, Y, and Z. And a good mortgage professional who's seen this thousands of times is not only going to be able to pick the best program for you, but also explain to you why. So let's go over a quick overview on the FHA Loan Pros. And I'm a big fan of FHA. So besides all the pros, I'm going to tell you the cons, but I promise you there's more pros than cons, right? So the biggest advantage in a lot of people's eyes is that the FHA loan is just more flexible. It's government backed. They're able to allow more leeway, right, for imperfect credit. You can have a credit score as low as 500 and still be eligible. You can also have a low down payment, 3.5%, but here's the caveat. If you have 3.5% down, you've got to have a 580 score. That 500 floor for FHA loans only applies if you can put 10% down. So for FHA, remember 10% down, 500 to 580 score. If you've got 580 or above, you can do 3.5% down. It's a great thing for first-time home buyers. It's not just a first-time home buyer program. I repeat, you do not have to be a first-time home buyer to use the FHA program, but first-time home buyers use it because a lot of them don't have perfect credit. A lot of them don't have a huge down payment. And so it's a good program. Like the example of how adverse credit, isn't as important with an FHA loan is the waiting periods after some sort of, adverse credit history, like a Chapter 7 bankruptcy, right? If you're trying to get a conventional loan, you got to wait 4 years after a Chapter 7 bankruptcy. If you're trying to get an FHA loan, it's only a 2-year waiting period. Similarly, shorter waiting periods when it comes to short sales and foreclosures and things like that. Talk to a local pro if you're coming off of one of those things. More pros, and I listed these, and I probably could come up with another handful of them, but I love using FHA for multifamily. It has to be a primary residence. Remember, you don't have to be a first-time home buyer, so you have to live in the place, but that primary residence could be a single family, a duplex, a triplex, or a fourplex. As you can imagine, if you're in a triplex, you're not occupying all 3 units. You're living in one and renting out 2. So it covers 2 things. It covers your residence and some investment properties. So, while it's an owner-occupied program meant to put you into a house, you can, use it strategically as an investment vehicle, right? Because you're living in one unit and renting out the others. So you must live there, but you can buy 2 to 4 unit property with FHA, like I explained. Another pro to it is there's no income limits. And a lot of people get confused because there's certain programs that are tied to FHA. Certain states or counties will come out with down payment assistance that's tied to an FHA loan, but it's not specifically, an FHA standard 3.5% down loan that has income limits. If you get a standard FHA 3.5% down, there's no income limits. You can make 500 grand a year and still qualify for this loan, based on, if it's the right loan for you, right? You are going to qualify for more with an FHA loan. And this is where, real world experience probably helps. I look at a lot of applications week in and week out. And what happens sometimes is it might be close. Maybe conventional 3% down, maybe FHA 3.5% down. They're about equal when it comes to monthly payment and cash out of pocket and all those other things that buyers are considering. But because FHA is more flexible with their debt to income ratios and the automated systems that mortgage professionals like me plug into to see if we can approve the loan, it's more flexible FHA. You're going to maybe be qualified for $440,000 FHA and only 400 conventional. Those are just random numbers I'm throwing out there, but know that you're almost always going to qualify for more on an FHA loan because of more flexible DTI standards. Okay, let's go to some cons because it's not all sunshine and rainbows. Mortgage insurance is mandatory on an FHA loan. If you don't know what mortgage insurance is, FHA actually has two types of mortgage insurance. One, they call upfront mortgage insurance premium, UFMIP. If you see that on a loan estimate, that's what that means. 1.75% of the loan amount is charged to you as the buyer as an upfront fee. Don't get that confused with the monthly mortgage insurance premium because you have to pay that as well. You pay an upfront mortgage insurance premium and you also pay a monthly mortgage premium. My hope is that this monthly premium, maybe even the upfront as well, goes down in the future. The FHA has enjoyed a long run of very few defaults. So they've got a lot of money in their coffers. They got a lot of big, bulky savings account. So FHA, if you're listening, let's lower those premiums. Let's lower the upfront and let's lower the monthly. As of right now, January 2023, that's what those are. But if you're watching this in 2029 and they've changed, hopefully it's for the better, right? So that is probably the biggest con, is that yes, you got to pay it up front. Yes, you have to pay it monthly. And yes, unfortunately, it's on there for the life of the loan. There's some caveats. If you put a bigger down payment, it'll fall off after 11 years, but who keeps their loan that long anyway? Generally speaking, you're going to have to refinance to remove mortgage insurance when you're getting an FHA loan. Okay. One more con, FHA loan limits are lower than they are for conventional loans. And I know that I've had newer loan officers miss this. And I have a buyer say, oh, I'm looking to buy in Fresno County. And in Fresno County, the FHA limit is only 65% of what the conforming loan limit is. So if you're in a county that's not a high balance county, in 2023, conventional limit is 726,200. If you multiply that by 65%, the 1 unit limit for FHA is 472,030. So $472,030 is the limit for a 1 unit FHA in 2023. So if you're in one of these counties that's not a high balance county, you can't go out and buy a $550,000 home with 3.5% down. The loan amount's going to be above that 472 limit. Can't buy a $600,000 home. If you're in a high balance county, a lot of the counties near me in Northern California and across the country, you can go up to 150% of the conforming loan limit, just like you can on conventional. So you get $1 million FHA, just like you can get $1 million conventional conforming loan. I'll leave the link down below to the Department of Housing and Urban Development website where they show the FHA mortgage limits by location, so you can check that stuff out. But be aware of that. The limits are lower on FHA loans. And if you run into it where, you're trying to buy a $600,000 home, but the limits are 472, that's going to be an issue. So that pretty much covers the cons. Upfront mortgage insurance, lower there. The bottom line, and what everybody wants to know is it a good idea for me to get an FHA loan, right? The CFPB has come out with something where they talk about, if you've got fair or poor credit and less money down, FHA loans are normally less expensive than conventional loans. I was going to do a side-by-side, but then I realized there's so many scenarios that, one, I wouldn't be able to do it justice, and two, I don't want to lead you astray. You really need to talk to a professional to decide which one is better. If you've got a 640 credit score and you're struggling to qualify for the 300 grand that you're trying to buy in your area, FHA is probably going to be the best bet. If you've got a 780 credit score and you're putting 20% down, more than likely conventional is going to be your best bet. And there's 1,000 scenarios in between. Generally speaking, people will say FHA if the credit is suffering and you got the lower down payment, but you've also got conventional loans with 3% down programs and 5% down programs. So the lower down payment isn't necessarily the only factor, but know that if you've got a 640 credit score and you're putting 3% down on conventional, it's going to be gnarly. The mortgage insurance is going to be gnarly. The interest rate's going to be gnarly. It's not even going to be close. FHA is going to be the better bet, and 780, 30% down, you're always going to do conventional, but there's a lot of stuff in between. So contact a local mortgage professional. If it's us, we'd be more than happy to help, and we're nationwide. Go to greatmortgagebroker.com, fill out the form. We'll be in touch. If you want to hear about some of the caveats to can I have more than one FHA loan or not, I've made other videos on FHA. Check here